Hey folks, Dan Frio here with some breaking news from CNBC on the PCE numbers coming in just now. We've been waiting for these all week. The reason being is it's the Federal Reserve's number one factor when it comes to inflation. So I don't even know these numbers as well. So let's get to Rick Santelli over at the CME, the Chicago Mercantile Exchange, to see how these numbers came in. Keep your fingers crossed, guys, because this could be a big day or a really bad day. Take it away, Rick.
Welcome back to Squawk Box. Rick Santelli here, live at CME HQ with important breaking news. Personal income and spending and all the Fed's favorite inflation gauges. On the income side, this is all November. We're expecting a number up around 0.4, comes in a little light. Up 0.3. That follows at least up to this point, an unrevised up 0.6. If you recall, prior to 0.6, we had September up exactly the same amount, up 0.3, and the prior month was up 0.2, to give you some context. Now, if we look at spending, expected to be up 0.5%, comes in a little light, up 0.4%. If we look at real spending adjusted for inflation, exactly as expected, up 0.3%. And that, of course, would comp to September, where we're up 0.5%. So we're coming back a bit. And if we look at month over month, personal consumption expenditure pricing index comes in cooler, up 0.1, following up 0.2. Up 0.1 would equal where we were in August. To find a lower number, you have to go to May of this year. Now, if we take a wider view, personal consumption expenditure year over year, expecting a number of 2.5, also comes in a little light, 2.4. 2.4, though, keep in mind, is still hotter than the rear view mirror. And this is important. Came in lighter than expectations, but 2.4 follows 2.3. To find a higher number than 2.4, you're actually going all the way back to July, 2.5. Now, if we look at the core PCE, which is probably one of the most important numbers on a month-over-month basis, up 0.1. That's 0.2 lighter than our last look, and it's cooler than expected. So that's a good thing, up 0.1. We have to go all the way back to May of this year to find a smaller number. And finally, what I consider the most important number of all, personal consumption expenditure price index year over year, up 2.8, equals where we were, 0.1 cooler than expectations, 2.8. If you go back in time to find a smaller number, that would be easy. That would be September, because we round here. So last month was 2.79, rounded to 2.8. Prior was 2.65. To find a bigger number, you're going all the way back to April. So not bad. And if we look at the market's response, it's as expected, because the numbers, for the most part, were a little cooler than expected, even though they really haven't made a huge amount of progress, especially on the year-over-year numbers. So we're currently trading 424, and that's in a 2-year. 424 would be down 8 basis points on the day and virtually unchanged on the week. If you look at a 10-year, currently trading at 450, that would be down 450, an extra 3. That's down 7 on the day, but it's up 10 on the week, which once again really underscores how longer maturity yields have been much stickier to the upside. And if we look at the yield curve today, and this is really important, 2s to 10s hovering a little bit above 26 basis points is the widest, the most steep that yield curve's been in 2.5 years, going back to mid-2022.
So that's great context. If you didn't understand some of that, let's just go through it. I'll go through some highlights right through here. But the good news is right here, the MBS market is taking this with great stride. MBS market's up 33 right now. So what you need to understand is right through here. If you're new to the channel, let me explain how this works. Okay, so we focus in on this channel to figure out where rates are going and so forth. But my concentration is having you guys understand real estate, because I'm actually a loan officer. I'm a mortgage advisor. I'd love to help you. I work at ServBank. We're the number 10 largest mortgage servicer in the whole country. We're also one of the country's largest mortgage brokers. So very unique situation here. So I can handle loans throughout the entire country, and with programs that, any program that's out there, I can most likely have it for you if it's a residential loan. So please reach out to us. I'd love to help you. Not only, you follow my rates, but please use my services as well. So let's get over to this. Let's show you how this works. Here's a bond. We focus in on at the top right through here is the price of the bond. So most bonds, when you look at it, they'll show you the yield. Like when Rick Santelli was going through, he's like, well, the 2-year yield is right, this and so forth. What they provide us for the mortgage piece is the price. So how does this work? Okay, so let me explain it. When the price of a bond goes up, the yields come down. Okay, so let me explain how this works. So a bond, like for example, a mortgage bond, let's say it's face value, it's an investment. Okay, so you can buy bonds. You can buy bonds on Wall Street. You might even have it in your portfolio or your 401k if you have a retirement plan. So you buy bonds. So mortgages are actually mortgage bonds. Okay, that's how they get packaged. So let's say you have a mortgage bond. Okay, its face value is $100, and whenever it matures, you get $100 back. Okay, so let me show you how if the price goes up, the yield comes down. Let's say today I give you $50 for that bond. Okay, I give you $50, you give me the bond, I hold it till maturity. Once that loan or the bond matures, I give it back to you, and you give me my $100. Okay, that's the face value of the bond. Well, I gave you $50. And it's now you gave me back $100. Okay. My yield, what is it? Well, I doubled my money. It was 100%. Okay. So let's make it simple. Let's drive up that price. Let's say I give you $100 today. So I give you $100. You give me the bond. The bond matures. I give you the bond back. You give me $100 back. You're like, Dan, why would you do that? Exactly, because your yield on that is zero. Okay, so you can see how if the price of a bond goes up, the yield comes down. So we love when this is up. Right now it's up 32 ticks based on today's economic news. What is it? Well, let's just go over graphically what Rick Santelli just went over. So what we were waiting for most of the week after the Federal Reserve met is here's what they're looking at. This is the inflation number they put the most weight on. So let's go down through it. The PCE month over month, this is the one I really want to focus in on. They focus in on the core because it strips out food and energy, but I want to look at month over month. How are we doing month over month? Because then I'll eventually reflect in over the year's number. So if you go down through here, the history of this is you can go back to June, the previous numbers through here. So the actual number came in June at 0.1, then it went to 0.2, then it went to 0.2, then it went to 0.1, then it skyrocketed. Well, think of it this way, it tripled to 0.3. In October, then 0.3 in November. We were all the way back down to 0.1 again this time. So that's fantastic news in the markets. And then here's what Rick said. He said over year, the core was at 2.8. It was expected to go to 2.9. I thought it would go to 2.92. That's why I was kind of nervous this morning. But it came in right in line. So we have year over year in line, but month over month is starting to cool down. So that's what we're really focusing in on right now. So that's going to be fantastic news for mortgage rates. Again, MBSs are up 32. So mortgage rates are going to reflect now. I don't think we're going to be back in the sixes, but we'll be pretty darn close to that today if this rally continues. So we'll see how that's going. Now, the equity markets, let's scroll over to there and see how they're reacting. That's kind of odd. I figured that the equity markets would be up today on this good news as well as crypto, and I don't think crypto's having a good day either. So let's go over here. Dow Jones and everything across the board is down. Oil is down too. That's great news. You guys understand why I focus in on that. And the 10-year Treasury is dropping as well. Let's go over to crypto. Crypto is getting hammered once again. It is down another 1.3% to 95,000. And let's go over to oil, and oil is down as well. So that's fantastic news right through there. So that's our report for today, basically. I'm seeing a flat market, or not a flat market. I'm seeing a flat equities market, but the bond market is doing fantastic today. So I'll be back later today to show you how all this ends for the day. But if you have any questions for me, please email me, and I'm going to give you all my information here in a second. Let's get over to my website. Here's our website, folks. TheRateUpdate.com. So what we strive on here is service. Okay. Yes, we shop your loans over a whole bunch of different lenders, but we pride ourselves in, you're going to work with 3 advisors here, me, Alan, and Dave. All 3 of us have over 20 years experience. That's what you need when you're navigating this environment. Then also it's that time of year, folks, where a lot of companies are just going to start freelancing and things like that. We're here working every day to win your business. So we just got our last closing, what just happened yesterday. It was a 6-day close. We got the loan in, and we were able to close it in 6 underwriting days. So that was fantastic news. So if you're in for a quick closing, you need some professional help. You want to navigate with an advisor. Let's say you had $1 million to invest, or you're looking at a house worth $300,000 or $400,000. Okay, think of it that way. If you're investing $300,000 to $400,000, who are you going to use? You're going to use a professional advisor that's been in the business for years, has all these programs for you. Or are you going to go to somebody you don't even know, hoping that they can help you and have all the programs and everything else? So don't just look at rates alone, folks. You need a professional that has the programs and the knowledge to get you done. So that's what we pride ourselves on here. So if you want to get the application rolling, just click the Apply Now button. I highly strive that you schedule a one-on-one consultation. The reason why is you want to know who we are. You want to vet us, okay? We also want to know your story. What do you need? What are you looking for? What are the complications, if any, do you have? And that's why you need us, okay? So schedule a consultation, or you can scroll down to the bottom and you can find our information right through there. And I highly suggest either scheduling a consultation or giving us a call at 844-775-5626. And if you're out there, especially a realtor, I'm working on a realtor roundtable, maybe spinning off a whole new website or a YouTube channel for it. So please reach out to me if you're a realtor out there, want to get involved. I'd love to hear from you. So email me at dan@therateupdate.com, and I will be replying to you as soon as I get your emails. So thanks so much for watching, folks. I'll be back later today to let you know how all this mess ends for today. Thanks for watching. Take care. God bless. Bye-bye.